Hey guys, so welcome to this next video. In this one, we're going to be focusing on just order flow. Now, when it comes to order flow, there's going to be a few things I'm going to mention in terms of rules. But pretty much this is going to apply to generally, the lower time frame and also the higher time frame as well. So I'm going to get straight into it. Okay, so what is institutional order flow, or just order flow, as many people call it? Now, order flow is the continuous mitigations of order blocks in a certain direction. This is seen across all time frames and is a method that it really could achieve some high risk to reward trades. You're pretty much going to see when it comes to order flow, a lot of it is focused on the lower time frame, but it also applies on the high time frame as well. When we're talking about, for example, the second mitigation type of trade, this is based on the idea of order flow. Now, if we really had to define it and look at it, it's defined by continuous mitigations. So it's exactly like this. Typically, this is what it's going to look like. You're going to reach some sort of high time frame point of interest, and then from that, get some change of character, and then order flow just continues to the upside, creating more break of structures up and up and up and up. And as you can tell, this is the pattern that you kind of start to see. Just as an example as well, we do have Euro USD. This is on the lower time frame, so I believe this is a 5-minute chart. But you can kind of see, as you do hit that high time frame demand zone in this case, as soon as we get that first change of character, then from there, it's pretty much going to be a focus on the order blocks on the way up. Now, in one of the other lessons, I do talk about both order blocks and imbalances on the lower time frame. In this case, not too many imbalances appeared. Hence why, you could really just focus on the order blocks and then that's what it would be to the upside. But like I said in that video, we really want to be focusing on imbalances on the lower time frames. And then from that, of course, your stop loss is going to cover the order block that's just below the imbalance as well. If we really had to zoom into this example right here, this example, it didn't reach the order block right at the bottom, but instead it hit that lower time frame imbalance, but that higher time frame down candle, so that larger order block in a way. Now, in terms of the rules that we need to know whenever we're using order flow, the first one, order flow works during times of expansions much better than times of consolidation. And you can always see that on a daily cycle as well. For example, when you take a look at Asian sessions as well, you're going to get a lot of consolidation. And that's exactly what we want to be avoiding within that Asian session. So avoid order flow within that time. But what we want to look for is we really want to look for expansions. And when do expansions usually occur? As we know, it always happens during London and New York sessions, even during the London and New York overlap. We've got an example over here as well. For example, we've got the Asian session. The Asian session high liquidity was taken, and then obviously now we've seen it completely reverse, which is a characteristic of London session. And then now it's just finding order flow trades to the downside. And from what I could spot in this example, two really good ones. One over here during the sort of the middle of London session, and this one was the New York and London overlap. So you can kind of see if price is really moving nicely and it's expanding, this is the type of thing that you want to be looking at. Rule number 2, order flow does not go on forever. It is not continuous, so know that after 2 or 3 mitigations, be very careful of what you decide to get into. And why I say that is because of this. As soon as you get multiple order flow sort of mitigations, you're going to get the creation of trendline liquidity. Now, in this example over here, as you can see, we were moving bullish at this point, but then we broke some primary structure to the downside, so we're moving downwards. Now, all we're trying to do now is wait for that retracement, so that pullback upwards, and now we're going to be looking for more sells. And as that happens, as you can see, a breaker structure downwards, boom, that gets you one entry. Another breaker structure downwards, again, another entry over here. But if this keeps on continuing and continuing, this is the problem. You get that formation of the trendline liquidity that's going to be taken at some point. So personally, if I was to enter this again, I would really not be too confident in this area now, just because we have so much of this going on that it's now becoming more risky to enter a sell from that area because of that liquidity above. So that's one thing you always have to keep in mind. Personally, I always say this, anything more than 2, 3 mitigations, you have to be careful. There are times where it goes on a lot further, um, but it's more rare that this occurs. Then, rule number three, use order flow techniques only at areas of interest. So that means that we're going to have to dive deeper into the high time frame as well. And just as an example as well, I brought up this little Euro USD 4 hour chart that we're looking at. And from this, I'm only going to be looking for sells from two locations. It's going to be this a supply zone right here, and also this supply zone right here. From that, when we enter these areas, that's when I want to look at the lower time frame. And then I can see if we'll be seeing the lower time frame order flow that I'm talking about. I'm going to get into a few examples as well. Again, it will be Euro USD. Generally, what I'd say is if you are sticking to the lower time frame and you really want to be sticking to that order flow type of trading, I would generally say stick to US dollar pairs, like Euro US dollar, like GBP USD, even gold as well, XAU USD is one of the really nice pairs for order flow. I've seen it a lot in the group throughout this whole year, and just in the past of backtesting as well. But yeah, we're going to be looking at this chart in the live example. So let me just get it up one sec. Okay. So there's a few points I want to bring your attention to this time. I've circled these two areas because that's what we're going to be looking at in more detail. But what have we got here? So on the high time frames, we're moving bearish from Euro USD. Fundamentally as well, we were moving bearish. So we had that confirmation. All it was is we were just looking for sells now. So initially, we did have this reaction on the high time frame. This was a 1 hour order block that it mitigated quite nicely. Broke some of the structure downwards. So as we can see, we were pretty much just waiting on the pullback to enter us into more sells. One of the benefits as well is we were looking for this liquidity build up at the bottom. So all this trendline liquidity was building up, and all we were waiting for was just that pullback. As you can see, now we go on the 1 hour time frame. This order block right here appeared. So as you remember, the second mitigation trade hit once, twice. Now we're looking to enter in this area. Okay, cool. So once we've entered this area, there's a few good points that I can see from this. First of all, we've taken out liquidity. So as you can see, this buy side liquidity right here, we've taken that out, ran into the second mitigation type of trade. So that's all good. Now, what we're waiting for once we get here is we're waiting for price action to give us an indication that we're going to be looking for sells. So as soon as we get that change of character down at an appropriate level, and to be honest, I would say if you were trading on the higher time frames, this would be the primary structure that you want to break. So if you really wanted to, you could have been waiting. So not for this entry, but for this entry right here. But let's just say, for example, we weren't doing that. We took it on the secondary structure, which I don't usually recommend. But if you are trading on the lower time frames, then it will be appropriate. Let's go down to the 5-minute chart. Okay. So we got this secondary structural break. And as we're moving downwards, as you can see, what price tends to do is you will see one break of structure, it pulls back to a nice order block. So here, for example, mitigated. So it moves quite nicely down to that order block, and then it continues, consolidates a bit, but eventually breaks downwards. As it breaks downwards, what you want to be waiting for, again, is that pullback to some kind of order block over here. And that's exactly what we can see. Now, if you really wanted to be specific on the 5-minute time frame, you could zoom into this area right here, this 5-minute zone, and then enter from that, to be honest. Again, as it goes downwards, you're going to see more and more order flow to the downside. You see, again, you're waiting for another break of structure downwards. So I would consider looking at this area. As soon as we break that, as you can see, price breaks downwards, then all we're waiting for is another order flow trade. Now from that, let's just forget this order block for now. The areas that I would be looking at would be right here. I wouldn't really consider this order block at the top, just because as you can see, this candle, it's already touched it. You see? It's already touched it on the way downwards. Over here, however, nothing's really touched it at all on the way downwards. So that would be our area that we look for. And then again, it moves downwards. Again, similar type of things applies. You're looking for that other break of structure. As it breaks downwards, you're waiting for that pullback. So I would have been waiting for this zone right here. But unfortunately, didn't get to it right now. Instead, what we did get was price broke down again, but beneath this low, broke down, pulled back to this order block. So as you can see, there's so many opportunities that you can get with order flow trades. You just have to be careful. Now, I'm going to give you an example of when you really do have to be careful as well. And we're going to talk about it in more detail. Over here, let's move out to the 15-minute time frame. The two areas that I had highlighted earlier. So the reason I say look for order flow once you get to a valid point of interest on the higher time frame. And for me personally, this example it just proves that, to a T. You're waiting for this high time frame order block up here, right? Right now, what we're doing is at this area, we haven't really mitigated any important zone right here. It's kind of just wicks everywhere. There's no order blocks appearing or anything like that. So if somebody was to really trade this, first of all, they've lost the second rule. To look for order flow at a relevant point of interest, we haven't even reached that. But let's just say you did. You started breaking downwards. Again, this whole rule of order flow, you're going to get a few touches. A few touches. What's this now? 3 touches. 1, 2, 3. You could even say that's the fourth up there, but 3 touches. And what happens? You start to get this buildup of liquidity right here. As you can see, what happens? Price eventually is not going to respect this final order block, but instead is going to push through it. So that's always the danger with this type of stuff. Again, similar type of thing. You're looking over here. We haven't even reached our point of interest yet. But what we started to see is order flow to the downside. It breaks structure downwards or change of character. And then it's reacting once, twice, 3 times. Then it starts to get induced. Again, similar type of thing. This eventually gets blown through. So this is the type of thing that I just wanted to bring to your attention when it comes to order flow. It's quite important in terms of, being careful in the markets. Like I say, you want to stick to that first, second, and maybe even third order flow mitigation. After that, be very, very careful because you can get stopped out exactly like this. But yeah, guys, that's going to be pretty much it for this lesson. Hope you benefited. But yeah, I'll see you all in the next one.